All right, recording's rolling. I appreciate everybody who had joined here on the Thursday night. Usually these streams are more geared towards the mental side of trading, as the mental side is going to be 90%. Good evening, brother. Good evening. How you doing? But as I was saying, the mental side is where we are going to be focusing today, as the mental side is literally 80 to 90% of what we are looking at when we are trading. A lot of traders don't know this. A lot of traders want to find the best strategy. They want to find the best algorithm. They want to find the best this, find the best that. What's new, right? But at the end of the day, the markets are going to move how they've been moving since they've started. And with that, understanding that and understanding that plays are going to be available every day. Setups are going to be available every single day is going to bring back our mental and give us the ability to step away from the charts and not let it control us, right? So what we're going to get into today and what we're going to talk about, at first I'm going to talk about Bitcoin and ETH. We'll talk about what we're looking for Bitcoin and ETH as far as our direction. And then we're going to go ahead and get into this gold short breakdown that happened earlier this morning. We'll talk about how entries were found, why they were found, and how time and price is affecting this certain trade here. So we'll talk about that. We're going to talk about the term behavior as well. That's going to head in place with both Bitcoin and ETH analysis as well as this gold analysis. And then we're also going to get into when you should be on the charts, as far as how long you should be on the charts when you're looking to trade, and all that good stuff. So at the end, we'll get into reviews of GBP NZD and a couple other trades that we were looking at as well. But I'm going to go ahead and get this started with looking at Bitcoin and ETH. I'm going to go ahead and look at Bitcoin and ETH on the higher time frames, talk about what is happening with this price action, what we were still looking for, and what could still possibly happen. So I'm going to start this off with Bitcoin. Sentiment is still the same, still looking for delivery higher into this area of supply, but let's talk about what could happen at these areas as well. Now that we have rated liquidity, right, we came out and took these highs, these equal highs that we had talked about over here, that price was going to then deliver to. After that occurred, let's just go on the higher time frames. We saw a push up into it, and we saw a wick, we saw a move down, and now we're seeing an internal lower high. As you can see, this was your high that caused an internal low. We came up, we made an internal lower high, so we could see continuation into this low here. There's two things that could happen at this area, and what would happen is what's going to be very, very important. One, we could distribute, meaning if we get a displacement underneath these lows, I would look for a price to come back up to supply that had broken it down, and then I would look for confirmation of that supply on a lower high, and then I would look for continuation to the downside into the monthly lows. If that does not occur, and instead we show a wick underneath these lows right here, mitigate this area, and then start to have an hourly break of structure to the upside with impulse, then I'm still going to look for delivery into the supply zone right here. The reasoning from that is this is your recent demand zone that caused this high here. So if we respect that demand zone, we could see price taking out that high. Weak high overall with the structural narrative that we talked about as well, from this low to this weak high right here. As this caused an internal weak high, it invalidated previous supply. We came back down, we made this supply zone right here, broke that to the upside, introduced demand, and then we saw another break of structure, mitigation of that institutional candle here, and that had your move up into this weak high right here. So we could reaccumulate or distribute right here. Personally, looking at more of a reaccumulation, and the reason I say that is because of the behavior and the action that we are having right here. Normally with a distribution, I would want to see price run up and start manipulating highs while leaving lows. Noticing here, it's taking out lows and leaving highs, right? We can see these equal highs right here. You could even call this trendline liquidity from these highs to these highs right here. But we're starting to see some type of relatively equal highs as we're manipulating lows. So when we talk about the behavior of accumulation and distribution, for distribution, we look for highs to be manipulated. So we look for highs to get taken out while we're leaving lows, leaving trendline liquidity, whatever it is, right? So if we take out this trendline liquidity, come down to here, right? I'll just draw it out visually for you guys real quick. You could even call this trendline liquidity right here. We could see that taken out. What is retail going to do at that point in time? They're going to short it, take it to the downside, put their stops over these highs. And what's that going to be? The fuel for us to now move higher within an internal bullish narrative. All right, so that's what we're looking at as far as Bitcoin goes. Weekend is coming into play. A lot of algorithmic back and forth liquidity as far as liquidity rates up and down. I personally don't look to play the weekends, as I wait for a Monday liquidity raid, and then I wait for the actual break of structure to look for where I wanted to take price. If it happens on Sunday, it happens on Sunday, right? But not looking to trade this over the weekend, but this is the sentiment as far as what we are looking at for Bitcoin. Now I'm going to go ahead and go over to ETH. Very, very similar story. Sentiment still hasn't changed either, but we also could redistribute here. And the reason I say that is because we're not respecting demand. Instead, we're creating new demand and just continuing to the upside. But within an accumulation, we look for the manipulation of lows while we leave highs, right? We're not so much leaving highs. We can see some equal highs that are left right here. So there's a few things that ETH could do as well. It could come down to this area right here of this institutional candle that caused a new high, create demand, and then start to have that move higher into premium that we were looking for to eventually come down into this 2-day fair value gap. Once it comes into that 2-day fair value gap, that imbalance that we have right here, as well as that unmitigated demand, we can see these lows taken out right here. Everyone's going to start to short again. And then what happens? We see that reversal, right? So ETH, same exact thing. As far as the structure goes right now, we can look at the daily chart. We did have a move up right here. We are still in this supply from this high that caused a internal low right here. But overall, I am still looking for some upside on both Bitcoin and ETH if it is given, right? So that was Bitcoin and that was ETH as far as what I'm looking for into the weekend. And then we're going to go ahead and get into this gold short as well. So let's go ahead and go over to XAUUSD and let's talk about this play that had come to effect. What I was looking for, why I was looking for this, and why it made sense, right? So this is the 5-minute chart as far as what I was looking for. The entry was up here at 1925, or 24.85 was the entry. And then there was a 3-minute fair value gap entry given right after for a 10 to 4. This one ran for 27 to 1, and then the other one ran for roughly a 7 to 1. And then this third entry I think was a 3 to 1. Yeah, 3 to 1. Okay, so let's go ahead and talk about these entries now, how they came into play and how you guys could have caught them on your own as well. So starting this off, and I'm just going to go ahead and hide all of this real quick. Let's just hide all of it actually. We're going to do this, and then this is a cool little trick too if you guys don't know much about TradingView or try to get some better understanding of how we can use TradingView, but go ahead and go to the object tree. Here it is, object tree, and then you have this group of drawings right here. So go ahead and click that, and then it's going to group everything that you had in one box. So if you guys have TA for the month, right, you can do this as October trades. All right, we can say that's good, and then we can hide those. And then that's now all in this folder. So if I wanted to go back, look at my October trades, then that's a way to do it. Just quick little TradingView tip that I had right there. But let's talk about what actually happened over here now. So on the higher time frames, we were holding bullish nature, and I'm just going to go ahead and bring this into replay mode. On the higher time frames, we were holding bullish nature from this low that caused this new high right here. On the daily chart, we had closed over previous highs on this move right here as well. I don't know why it won't let me bring it back that far, but on the daily chart, you can see we closed over these previous highs right here. I personally use bodies as what I look for breaks of structure, and I look for this for the behavior within those areas. And the reason I say that is because I'm looking for a higher time frame reaccumulation on gold within these areas right here. Overall, looking for price to come down to these areas in this fair value gap of this daily chart, and then come down, fill the 50%, right, and then show that 4-hour break of structure to the upside to now put us in that bullish nature, to now show the overall bullish trend that we are starting to create. Now, Overall, I was looking for this, right? So now if we go to our lower time frames, if I go to a 4-hour chart, bring in replay mode, bring this back here. As far as what I'm looking for a breakdown on the 4-hour chart, to take it to this area, to take it underneath these lows, to take it to here, I was looking for an hourly break of structure to the downside or an internal low that was caused. So if we go now to the hourly and we play this out, let's just play it out a little bit. We can see that drop down on this move right here. It wicked these lows, and then we started to see a move start to come up after that. Now let's talk about the behavior at this area right here. On lower time frames, I was looking for longs within this fair value gap of this 15-minute candle right here, right in between this, to come down, mitigate this institutional candle, and take out this sell side liquidity, right? So I was saying, okay, could take it out, start to feel longs, get into this institutional candle, look for a break of structure upside, and from there I will look to take it higher, right, into this high right here. But let's talk about what had happened. This is your internal high that had caused this internal low right here. So your area of supply starts with this institutional candle. And we can look for confirmation once we come into that zone. So this is that first area that I was looking for right here. I was looking for price to take out these lows and then start to move higher. And if that were the case, then I was looking for this high to get taken out. But let's talk about what had happened on this move to the upside. So if I play out a few more candles, we can see that we actually left that liquidity to the downside. We did not take that liquidity out, and we did not mitigate this area, this fair value gap, as well as this institutional candle. That tells me this is unhealthy price action on the move up. Why is it unhealthy? It's unhealthy because we're not respecting demand. Okay, so that's when I start to say these moves to the upside are unhealthy, or the moves to the downside are healthy. Now, this is going to be the very important part because we talk about price, right? So if I draw out my fibs from my low to my high, and I just do it as a premium and discount, then you have your premium and discount. Where would we look to take the short to the downside within peak premium, as well as mitigating supply and as well as breaking structure to the downside. So at this point in time, we saw price moving up. Lethargic again, starting to leave lows on this move to the upside right here, taking out highs, coming into premium of this high that had caused an internal low. We see the move up into that area, into that supply zone. And then now this is where it's going to be very important, especially with XAU. I'm looking at the Tokyo session. No problem, little friend. That definitely a helpful little tip for you guys to save your charts and save the data on your charts as well. But yeah, with this setup right here that we were looking at, Tokyo session is going to be very important, especially with gold, and I'll tell you guys why here in a second. So if I go ahead and throw on my FX market sessions, we're now into Tokyo session. With gold especially, Tokyo likes to consolidate. Okay, so a lot of the times I will wait for a liquidity raid of Tokyo's session, highs or lows, into London to look for my entry. And the reasoning from that, and just from a logical perspective of market sessions in general, think about the traders, the billions of traders who are trading just the sessions. When they quit trading just the sessions, what do? They put their stop loss at the high of the session, or they put their stop loss at the low of the session. To them, that is the high or the low of the day, right? So if they are thinking that it's the high or the low of the day, that's their stop loss, they'll be good to go. What happens when they wake up tomorrow and they're stopped out of their trade, right? They're going to flip bias. So once they flip bias, then we see a liquidity raid and we see a move opposite. Right? So this is what I'm going to go ahead and talk about with Tokyo especially. I'm going to go ahead and throw on London as well. And then we'll talk about the move into Tokyo. So I was waiting for Tokyo, waiting for the completion of Tokyo, and waiting for the Tokyo high or the Tokyo low to be ran. So we saw a move up into that supply zone. And then Tokyo was starting to near to an end, and I was waiting for London to then join to look for this move to the downside. I actually caught this on the 15-second chart, but I'm not going to go ahead and show you guys that because that doesn't help with the way you guys are trying to learn this behavior coming up into these areas right here. So we can go to a lower time frame, even a 3-minute chart. And as we were coming into this area, I was waiting for London to open so we can play out a few more. And then once London had opened, I was looking for the raid of the Tokyo highs or the lows. Here's your Tokyo consolidation, and notice the behavior as well as we are coming up into this area. We can see all the clean equal lows that we are starting to create. London opened, liquidity raid to the downside, still within the Tokyo session. And then I was looking for this Tokyo high to get taken out to look for the entry. Now let's play out a few more candles. We can see that it's starting to have that move up into those areas, into these highs right here. Play out a few more. We see that raid of the highs right there. And this is where I looked for that entry. With the 3-minute chart, we can find a fair value gap as well. Here's your break of structure downside with displacement. This is what we look for. We look for the candles that stand out. The elephant in the room, right? This is very, very obvious. Price wants to go downside. We can look at this and say, yes, made a large move to the downside, broke multiple structure points. You can go on higher time frames as well. Look at this similar candle, but I'm not going to on this specific one here. So let's talk about how we could have caught this entry now. Let's play out a few more candles. There's one candle. And then once this candle had closed, you now have the creation of your fair value gap. Your ICT fair value gap, or your imbalance, whatever you want to call it, within this area. From a Wyckoff standpoint, distribution, lower time frame accumulation to then distribution. That's all it is, okay? So we now have that entry available. I'm going to go ahead and draw out a Gann box for the imbalance within this area right here. You can look to take entries on this at the high of this candle here with stops over the candle that created that. Now, targeting lower into discount, into those lows. Remember those lows that we had talked about back here? Same exact story. Now that it has shown me that it is unhealthy, I am looking for delivery into those lows, as they did not create any new demand within this area down here. We didn't get that liquidity rate down to respect demand to look for that move higher. So now we have that fair value gap entry. We can play out another candle. We can see that tap into that fair value gap on this candle right here with this high that had, or with the stops over this high right here. And now we can look for that delivery lower into these lows right here. So let's go ahead and play this out now. And we see that delivery following right after. Now within this area, this is where a lot of traders may get shaken out of their trades, right? And the reason I say this is we're now sitting back in equilibrium of our range. So many traders are saying they'll look at a higher time frame chart, 15-minute chart maybe, and they'll say demand zone right here, I'm going to start to long this, right? But if you notice, we're taking out lows. We take out a low right here, we take out a low right here. And I'm going to go ahead and take off my market sessions now to understand what had happened. So we took out lows right here, and we took out lows right here. So this demand is now invalidated to me. Instead, I'm looking for an accumulation up into now this fair value gap that we created on the higher time frame chart. Here's a 15-minute fair value gap, and then I'll show you the hourly as well. Accumulation to then distribution. Following a distribution, we look for the actual distribution to occur, and then following the redistribution is continuation. With accumulation, following an accumulation is reaccumulation. That's what we saw right here. Following a distribution is redistribution. That's what we're going to see right here as well. But let me go ahead and throw on the hourly chart now. So if you guys wanted some more confirmation, if you wanted to wait for the hourly breakdown and you didn't just want that 3-minute candle, that's completely fine as well. There's still opportunities as far as how we can look to take these trades. Gann box here. Here's your zone. Accumulation to then distribution. Let's go ahead and play it out. Let's watch how it comes into this area. Play out a few more candlesticks. Comes and taps into that fair value gap, and then you see delivery lower. I have no clue what it is doing right now, or with this Gann box, why it's just throwing everything to the side like that. But we saw the move into the fair value gap right here, and then we saw new lows created. That accumulation to then distribution I was looking for, following a distribution into these lows right here. Now let's watch the behavior as we come into those lows. We take out those lows, and now that the lows are taken out, now that all the longs are taken out of their trades, you notice we came back down into this area. We took out these lows right here. We're now back in peak discount. We could possibly see a move to the upside from here. So now that this trade has been completed, we look for that move to the upside. And what do we get? That move to the upside following a liquidity raid of quote-unquote early longs. So now we can start to see how the entire narrative comes together as far as what I'm looking for with these setups. Very, very clean as far as XAU played out. And then overall, still looking for the Friday distribution to then play out. We can just play this out all the way where we're at right now. But we're at this level right now, still creating new lows. We could see continuation into this low right here. The reason I say that is, one, it is I don't know why TradingView is doing this, but one, these are H4 higher time frame equal lows, as well as these 1 hour equal lows we can see, and the 15-minute equal lows as well. And this low did not cause a new high. Instead, we broke structure to the downside and created supply. So I was looking for delivery into these lows for a higher time frame reaccumulation. After we take out these lows, fill that fair value gap, and then start to continue higher. So now you guys can see how the higher time frame narrative can still be played on lower time frames. It's making up the story to come to this area and to look for these trades like this. So XAU, again, very, very clean setup, very, very clean the way she played out. Tokyo liquidity raids are going to be very, very important with a lot of pairs actually, but XAU especially. If you guys notice indices and go ahead and throw on a market session indicator or something similar, you will see those highs and lows of the sessions manipulated, and that's for a reason. That's because time and price is manipulated. Price is manipulated to make it look like it's going one way when it's actually going to go the other, and time is manipulated for the same exact reason, to make it look like it's going to go one way, but it's actually going other. One is visually and one is psychologically, right? So, obviously both of them are psychologically as far as how they can manipulate you, but at the end of the day, if the time is going to be more psychological as far as people who are looking to get into trades, right, or set their stops over highs or lows of a certain day and or a certain session. So that was XAU as far as what I was looking for that certain trade, the entry and then the delivery into these lows right here. Once that was given, entry, take profit, done and done, and then you're good to go, right? So that was XAU as far as what we are looking for. We talked about Bitcoin and ETH coming into the weekend as well. Now I want to get a little deeper into understanding the term behavior and what it actually means to an institutional trader and how we can use that and utilize that term behavior overall. Now we're going to talk about the difference between behavior analyzing and pattern trading, okay? So let's go ahead and put both of these down. We'll get out of replay mode here. Put behavior down. And then we'll put down patterns. And we'll talk about the pros and the cons of both, right? So let's go ahead and start off with patterns. Many of you guys may know patterns when you first got into trading, when you had a friend who told you about it, or maybe you saw it online, there's an ad or something, and the pattern said bull flag or bear flag or whatever it was, right? The issue with patterns, and I'm just going to say this off the bat, is the fact that the market does not move based on patterns, okay? So the market does not move based on patterns, and that's the biggest issue that traders have, because obviously patterns do have a win rate, right? Cup and handle, 60-40% chance, right? I don't even know bull flags or bear flags or anything else like that as far as any percentage, but patterns hold the possibility to not understand what's going on, right? And behavior is going to give you the possibility to understand what's going on, meaning I know why I was right in a certain situation, I know why I was wrong in a certain situation, and I know how to capitalize that on the next. And we'll also talk about losses as well, because many take losses and they automatically believe it is a strategy, and that's the reason why they're losing, right? We need to understand that losses are pretty much the best thing that can happen to you for your behavior and for your analysis as far as how we are looking at charts, right? So patterns, they hold the ability to fail, as well as the ability for the trader to not understand. The price action. So let's just wrap that real quick. Bring this over here. So patterns hold the ability to fail, as well as the ability for the trader to not understand the price action. Behavior also holds the ability to fail. Failing is a part of this game. Failing, if you are either afraid to fail, or if you don't want to take a trade because you think you'll lose out, then you should not be looking to trade. And the reason I say that is because it's a part of the game. You're trying to find certainty in a market that is uncertain, in an asset that moves with uncertain benefits or uncertain doubts, right? So instead of trying to find the right in everything, instead just start taking what the market gives you. And what I say this is from this behavior. So behavior also holds the ability to fail. But brings understanding to the trader specifically. Okay, so with patterns, we hold the ability to fail, as well as the ability for the trader to not understand the price action. With behavior, you hold the ability to fail, but it brings understanding to the trader. So now I have a situation to where I can start to better myself, better my psychology, better my analogy, and better my analyzing purposes, right, for these charts and for these setups. With indices, with gold, and with some of these commodities, you will find that they behave differently. And the reason I say this is based on how the charts move. You'll find, obviously, Wyckoff in every single chart, but many move differently. Many like to mitigate certain areas. Many don't. Many like to just continue and continue, right? They reaccumulate and continue to the upside, or redistribute and continue to the downside while you're left behind. Gold's a very good example of that. But behavior is going to bring you the ability to understand the markets for how they move and for why they move. So instead of looking for patterns, as Wyckoff can easily become a pattern, and I'll tell you guys this in a second, but focus on the behavior. Start to see how the candlesticks react with each other, and ask yourself, why did it mitigate certain areas, or why did it touch that area, or why did it hit a certain area of fair value, right? So this is going to be very, very, very important when we are looking at behavior of the candlesticks. So I'm going to go ahead and delete these now, and we can use, actually, we'll just use ETH as an example. So let's talk about how Wyckoff can easily become pattern trading. And the reason I say this is because there are many instances where traders, they want to take certain trades because they think they see a perfect Wyckoff setup, because they believe it's super intricate and it's super detailed. So they believe they know exactly what they're looking at. But obviously with Wyckoff, we understand redistros and reaccumulations. The whole point of those is to take out those people who are trying to just find the distributions, or trying to just find the accumulations, and to manipulate as much as possible. So to not be manipulated within these certain scenarios, the easiest way to recognize Wyckoff is to wait till the very end. Wait till the break of structure at the very end. And now you can start to understand the behavior and how certain behavior is actually going to make sense. Meaning, in this certain accumulation scheme right here, waiting for the final break of structure, the break of all these highs right here, I now have an easy demand zone to now take my trade to the upside, as well as confirmed accumulation. right? Instead of looking for trades down here, I can wait for that move to the upside right here. And I now have an easy continuation trade to the upside, because now I know we're bullish because we've broke out of an accumulation as we were manipulating lows and leaving those equal highs. So now we can start to see when an actual Wyckoff schematic is going to appear, right? I could bring this back, and I'm just going to bring this back to over here. And let's just say I looked for accumulation within this area, right? We saw a redistribution, but then I was like, we're taking out lows. We're starting to make some new highs, maybe some equal highs as well, some trendline liquidity, right? We can see trendline liquidity, and I start making up all these scenarios for why this should be accumulation when it doesn't need to accumulate. All we had to do was follow the structure of the higher time frame narrative and understand that this was that breakdown. So this high caused this new low right here. If we want to see continuation higher, we would need a break of structure of this high right here. And we would look for these highs to get taken out. So instead of me sitting there and calling an accumulation over and over and over again, saying here's the spring, here's the spring, here's the spring, here's the spring, and trying to catch that, right? Instead of trying to catch the very bottom, I can wait for this break of structure to the downside, or look at my higher time frame market structure and say, okay, if we break these highs, then maybe this is an accumulation, and I can look for the test, the reaccumulation for continuation higher. But instead, we redistribute, right? And everyone who is trying to buy bottom is getting taken out of their trades. All of this liquidity is now the reason that price moves to the downside, as the algorithms are now seeking that liquidity to the downside. Here's your structural narrative. Lower high. Internal lower low, we came back up, made another lower high, broke that low, now we have continuation. So now we can see where that double break of structure came in. We came up, made that high, made equal lows, broke that low to the downside. There's your double break, one right here, second right here, supply zone right here, and then continuation to the downside. Candle before candle that caused displacement, right? Now we can start to see how the narrative is starting to play out. Instead of calling a Wyckoff accumulation, instead, I'm looking for a redistribution from an accumulation to then distribution, accumulating all of these orders right here, starting that area of liquidity that retail is saying support, right? Support, buy. They buy it. What happens? They set their stop losses underneath these lows. And now the stop losses, their money is now the reason that price moves to the downside. Okay, so instead of trying to find that Wyckoff narrative and trying to understand what is happening, study the behavior of the entire chart, the market structure, the supply and demand, as well as the Wyckoff confirmation within your zone. So instead of trying to sit there and call an accumulation over and over again, and maybe you got a good move on this trade right here, but you're still holding it because you're like, it's accumulation, it's going to reaccumulate and then break out. Right? And then you're stopped out at break even. So you buy again, stopped out at break even, buy again. And all of a sudden you are now that retail support that everyone is looking to then take out. Okay. So behavior is very important when we are studying Wyckoff in general, when we are studying market structure in general, when we are studying how the candlesticks move. When you want to see uptrends, you want to see lethargic downside moves. You want to see equal highs that are being created on those moves to the downside, as that is now giving reason for price to continue to the upside after it is broken out. Okay, so very important when we talk about behavior. Now I want to get into how long you guys should be on the charts, and we'll go ahead and put this out. Okay, so how long should I be trading? This is a very popular question that's been asked, and this is what's going to now get you into a job mentality. And the reason I say this is because you'll start to take less trades, and you'll start to actually put the effort into those less trades because you're only taking 1 to 2 a day or 1 to 3 a day, whatever it is, right? Based on your plan, based on your narrative. So how long should you be trading? This is where it's going to get very important. Now, it's based obviously on your time frame, your time zone, your daily life, what you do in your daily life, your hobbies, how you look to trade. Now that's going to become your session times, right? So if you're in Asia and that's your time that you can trade, that's the only time you can trade, then you're looking to trade Asian session. Look to trade some Asian pairs if you're trading Forex, right? Because you'll have the most volume within those pairs within that session, right? So how long should you be trading? So as somebody, personally, as an institutional trader, a swing trader, I look to make 1 to 2 trades a week. So that means I probably spend 4 to 5 hours on the charts at most. And also run this with your time effectiveness as well. If you guys are sitting there on the charts for 8 hours a day and you're not profiting at all, why were you there? You just wasted pretty much 8 hours of your time staring at a chart, either not learning, just looking at your P&L, looking at the chart, right? Looking back and forth, not trying to understand how the chart is moving, not trying to understand the behavior. Instead, you're sitting there trying to will something your way because you believe it's going to go up or you believe it's going to go down. So something I've started to do, and something that I recommend for everybody when you get in your trade, is to simply walk away. Set your alerts at your stop loss, set your alerts at your take profit, and walk away. What this is going to start to do is now going to get you to start to trust yourself, because you now have to trust yourself within that certain position, within that narrative that you're looking to trade. So personally, I believe that the most time that anyone should be spending on charts a day is 4 hours. And the reason I say 4 hours is because I'm just throwing 2 hours out there for back testing, 2 hours out there for anyone who's looking at charts during the day, not taking trades. And then the other 2 is going to be when you're actually trading. And the reason I say this as well is because of the session times. Personally, I look to trade New York session the most. Sometimes I take entries on London. But if I'm trading New York session, I'm looking for the algorithmic liquidity to drop at 8:30 in the morning, 8:30 a.m. NYC time. Once that occurs, then I have my trade as well as my narrative for the day. And once I'm in that trade and out of that trade, I just had a 20-minute work day, right? And if I profit on that trade, then that time effectiveness now starts to come into play, meaning I only spent 20 minutes on the charts to make 5 to 10 R&R, right? And that's 5 to 10% on an account. That's perfectly fine. I'm perfectly okay with that. All I did was spend 20 minutes on the chart. But if I spend 8 hours on the chart, I see more opportunities, right? And I'm always trying to trade, and then you start to overtrade, and then your psychology gets bad, and then you believe it's your strategy that's wrong, when really at the end of the day, it's just you trying to will something your way and trying to figure out something that's going to go in your direction. But all you have to do is pick a session time, pick 2 to 3 pairs. You could even do 1 to 2 pairs. Pick a session time that you like to trade. So let's, I'm gonna go ahead and put this down real quick. We'll just write this down. Pick a session time. So that's 1. Pick a session time you like to trade. All of this is relative based on how, I was saying before, how you trade, when you like to trade, and when you can trade. When you can sit down with full clarity, have no distractions around you, and be able to analyze this chart with a logical perspective, right? So pick a session time, pick that time that you're okay with trading. Pick 1 to 2 pairs. I did 1 to 3, but 1 to 3 is fine as well. So pick 1 to 3 pairs. Pick a session time, pick 1 to 3 pairs, and then what this is automatically going to do is automatically start to limit the amount that you are looking at, the amount of charts that you are looking at, the amount of candlesticks you are looking at, and it's not going to get you in that analysis paralysis type phase where you just, one day you open up the charts and you're like, I have no idea what I'm looking at, right? You're like, I gotta go back, I don't know what's going on, I don't know what's happening. But pick a session time and pick 1 to 3 pairs. This is automatically going to force you to now find these higher time frame, both higher time frame and lower time frame setups within a certain pair, as well as you can start to understand the behavior. When a certain price is going to move during a certain session time, 8:30 liquidity raids, right? When news is starting to come out, and then you can start to see how everything is going to line up as far as a catalyst for news, right? As far as when certain pairs move, like I just showed you guys the Tokyo London raid with gold, how that's very, very important, how I look for the Tokyo highs and the lows to get taken out before I look for that move. That's a behavior of XAU that I've started to pick up from trading it for so long, right? Trading it for a month, month and a half, I started to see that and say, okay, so I'm going to look for this next time. Once that came into play, I was able to get a profitable trade, right? This is how you're going to start to learn behavior on these pairs. I personally started making the most money I've ever made in trading when I only traded ETH. That was all I was trading, was Ethereum. And I made the most money I've ever made in trading, the quickest, the fastest, and I wasn't even thinking about it. I was just trading ETH up and down based on the structural narrative, and that started to bring those profits. And I look at my portfolio, and all of a sudden I'm 10 times, I'm 20 times, right? So that's when you'll start to notice that, because now you're focusing on the session time, you're focusing on the pair, you're focusing on how the pair moves instead of focusing on how much can I make. Because at the end of the day, the market is going to humble you if you do not try to actually learn that behavior yourself. If you do not try to understand when certain prices are going to move and when certain prices are going to not move, right? When should you be trading, as far as should you be trading during spread hour? Should you be trading on Fridays trying to open up swing positions on Forex, right? That's not very smart. The sessions indicator is called... indicators right here. It's called FX Market Sessions by Boy Toki. It's got 1800 on it so far. But it's called FX Market Sessions, and it shows the highs and the lows as the session is being created. It's a pretty cool little indicator. Let me check other mentions. I don't think I have any others, but yeah. So once you pick your session time, once you pick your 1 to 3 pairs, then you're going to start to get that clarity as how certain pairs move and how certain pairs start to react to each other. You guys can go look at funded traders. You can go look at interviews. Most of them are only sticking to a singular pair or 2 pairs. And what that does is now gives them that ability to have a job type scenario where they go to the charts at the same time every single day. They're only on for 1 to 2 hours or 2 to 3 hours, and then they're off for the rest of the day, and now they can go do what they want with their life, right? Maybe they have another job, they can go do their job. This is going to bring that job type mentality to trading, and once that job type mentality comes into trading, then the business comes into trading, and then you're making money like a business, right? So stop gambling, stop trying to find those big moves, and pick 1 to 2 pairs and pick a session time that you are comfortable with trading. And I promise you, it's going to bring out how you look to trade and the behavior, and starting to understand how charts move so much better, so much quicker as well. So with that being said, as far as how long I should be trading, that's all I have for you guys. But I want to go ahead and get into backtesting now as well, and how you guys should be backtesting, because a major issue with backtesting that a lot of people have, and I had this especially when I first started, was when you go back on the charts and you're automatically looking for where would I enter, right? You start to backtest, you go back on ETH and you say, okay, I would have entered a long right here, taken profit right here. But does that teach you anything at the end of the day? No, it doesn't. It doesn't teach you how the candlesticks behave. It doesn't teach you how they move, right? So when I'm backtesting and going into replay mode, instead of saying, where would I enter? I ask myself, why did price react at this area? Or I ask myself, why did it react at this area right here? And then I look to the left and say, okay, it was an institutional candle after liquidity rate to the upside, break a structure to the downside, comes back up to that area of supply. I look for confirmation, break a structure to the downside right here. Okay, now I have an entry, and now I have a take profit as well, back into discount into these lows right here. Now you can start to backtest that way, because you're reading the candlesticks for the behavior instead of just going on the charts and saying, where would I enter? Another thing with backtesting too, if you guys like to backtest with replay mode on, backtest where and start to think about where you would react at certain areas. So when you see this move up here, say, if I was trading this live, how would I think in this type of moment? And then you can play it out and then watch how it happens and say, okay, I might have been stopped out on that trade. Let's go back and understand why. So now you understand why, and you're saying, okay, maybe I was too early on this short to the downside. I had to wait for confirmation right here, right? So now it's going to start to bring out this mentality as well as to your strengths and weaknesses, both mentally and with your strategy as well. But I don't look to understand my strategy more with backtesting than I do look to understand the behavior of the charts when I'm backtesting, the behavior of the candlesticks when I'm backtesting. I'll go ahead and do a little picture real quick for the session indicator. Should be on here. I'll just draw a little picture real quick and post that as well. Alright, I posted that picture in stream chat. It should come up here in a second. But it is FX Market Sessions by Boy Toki. But again, with backtesting, try to understand the behavior of the charts. Try to understand the behavior of the candlesticks. Look over here and say, was this a real accumulation or not, and why, right? I'll bring it back right here. And I'll say, okay, we had a rate of the lows right here. We had a break of structure to the upside right here. Would I look to enter within this area? And I would say, not quite. I would look for confirmation on a break of structure to the upside. So then I wait. I see the break of structure to the upside. I now have that area of demand. And I can say, okay, next candle should come back into that. And it should continue to the upside. We see the candle come back into that right there after creating that long liquidity. And then I'm right. So I can say, okay, I'm good on that one, right? So I can go ahead and take a look at that now. I'm going to open chat real quick. Oh, perfect. Frizz just said for people who need a session indicator, he has his own Playbit sessions indicator. Very, very, very nice. I'm going to try to check that one out as well and let you know how that goes, Frizz. But appreciate that, brother. It's in the late night crypto vibes, the little stream chat to the side if anyone wants to open that up real quick. But what we were talking about before, go ahead and ask yourself how you would react at certain levels, and then ask if you are correct within that scenario. And then look at the candlesticks and say, okay, it should take out some lows, right? And then break structure to the upside. If it does not, then I'll look for a continuation to the downside. It broke structure to the upside, so we're like, okay, we're looking for price to mitigate this area of demand and continue to the upside. We can see that it does that, and then we can see that it continues to the upside. Now I have become confident in my analysis, and I've become confident in what I'm looking for. So what's that going to do? That's going to bring now repetitiveness into the way I trade, and now I can look for that similar setup every single morning that I'm looking to trade at that certain time. So now I'm only on the charts for hour, 2 hours a day. And then once I am done, I am done. Done for the day, done for the week, depending on what I made on that certain trade, right? That certain session. So understand the behavior. I've been repeating this over and over again, and I will, because that's very, very, very important. I'm trying to drill this into your guys' head. Understand the behavior of the charts and how they actually move before you ask yourself, where would I enter? Because at the end of the day, it needs to be treated live. When you are backtesting, treat it live. Treat it as you would if it were a live chart. Think about you putting money into that position. Think about how you would feel if you were to place money into that certain position, right? So understand the behavior. Very, very, very important. And when you're backtesting, don't just look for where would I enter. Just try to understand how the candlesticks move and ask yourself, this is already going to be a huge thing. Just ask yourself why. Why certain areas hit, why certain areas don't. And then I can say, okay, premium, fair value gap. I can see now why that hit, right? And then I can say it should distribute to the downside, break structure to the downside. Is that the behavior I would want to see in a distribution? Yes, it is, as we're manipulating highs, leaving lows. I see the break of structure to the downside. I say after a break of structure to the downside, I look for an accumulation to the distribution. What do we see? An accumulation to then distribution. So now I'm like, okay, we can now look for the continuation. This is our next area of supply. So I look for price to create another low and then come up, make that lower high, take out some more shorts. That's exactly what it does. Another accumulation to then distribution, and more continuation, and continuation, right? So at the end of the day, when you are backtesting, biggest thing is looking for behavior. Biggest thing is asking yourself, why? At the end of the day, when you're looking at how long you should trade, pick a session time and pick 1 to 3 pairs. both of these rules are already going to elevate your game past 90% of your peers. And I tell you this because it's true. I tell you this because I went through myself, and I tell you this because every pro trader out there, every professional trader out there is saying the same thing. If you guys are not journaling your back tests, and you're not journaling losing scenarios and journaling winning scenarios, then you're never going to know if you're truly know the market and truly know the behavior and truly know if you can be profitable within this game, right? So we got about 5 minutes left. I'm gonna go ahead and leave it up to questions now. If anybody has any questions or any charts they want to go ahead and let me look over now, then I'll go ahead and do that. If not, we'll end this stream here pretty soon. So I'll give it about a minute, 2 minutes. You guys can go ahead and drop those questions or drop any charts, anything like that that you want me to look at. And also, if you guys are muted, I can go ahead and unmute you as well. If you have any questions that you wanted to ask me, or just feel, if you feel like it, just unmute yourself and go ahead and ask me as well. I'll give it about a minute for that. If not, then we will go ahead and end it for today. But at the end of the day, and our main points of everything that we had said here, is to limit yourself and keep it simple. Limit yourself, keep it simple, and keeping it simple is picking a session time, picking 1 to 3 pairs. Keeping it simple is understanding the chart for the behavior and not for certain patterns. Because if I'm looking for patterns over and over again, then at the end of the day, I don't know how the candlesticks move. Instead, I'm just looking for a cup and handle or looking for something similar, right? Behavior, understand picking a session time, understanding picking 1 to 3 pairs if you like to trade crypto, Bitcoin or ETH. And Forex, based on how you are, where you're at, right? Again, that I was talking about certain session times. Knowing when to trade, saying I'm not trading after lunch, right? Because usually PM session is slower, and 8:30 in the morning has those moves, especially for New York pairs. And asking yourself when I should be trading, how long I should be trading. And if you've noticed, and this is something I will just say off the bat, if you've ever gone back and looked at your journal trades or looked at your days where you have been unprofitable, go look at how long you were on the charts, go look at how much time you spent on the charts, and go look at how many trades you made. Maybe you made 50, 60 trades that day, right? That's way too many trades. I'm making 1 to 2 in a day, maybe 3, right? If I'm stopped out once or twice in a certain trade scenario. But at the end of the day, I'm not looking to trade 50 trades in a singular day, because I understand that I can come to the charts every day at the same time, and the same setup is going to appear to itself, whether it's to the upside or whether it's to the downside. Understand that there are always opportunities in this market. Ever since the Great Depression, ever since the markets were the market, there has been opportunities to make money and to profit in this market every single day. So very, very, very important as far as what we are looking for. I appreciate everybody who had popped out tonight, getting a mental understanding, getting their mental better as far as how you guys can be better traders and better people, because that will reflect on your day-to-day life. Now that you've set a schedule for when you're trading, I guarantee you're going to start to scheduleize things during your life, or schedule certain things that you like to do. And now you're not sitting around and doing nothing, right? Instead, you're having this job type mentality. You're coming to the charts every single day and making that trade every single day, or not. There's some days I come to the charts and I don't make a trade at all. I just watch the charts for an hour or two, and I don't have my setup that appears, and I'm saying, okay, that's not my narrative. I'm just going to go ahead and leave it, because I understand there's opportunities, as you should as well. Right? So again, thanks to everybody who had popped out, and try to get that mental analysis, try to get that learning. This was recorded, will be posted to YouTube after. If there are any questions that I didn't get to, or any questions that you guys would like to ask, feel free to ask those. Just at me in chat. You guys can add me and DM me as well, and I will answer those as soon as possible. But thanks again, everybody who had came. And I will catch all of you guys later in our next session. We're going in on Sunday as well for our Intro to SMC Part 7. So thanks again, everybody, and I will catch you all later. Have a good one. Peace, peace.